From a financial point of view, let me be blunt, Detroit's broke.
And with that, the largest U.S. municipal bankruptcy in history was announced. For Detroit, this slow train has been approaching for the past 60 years. Once America's fourth largest city, the Motor City has seen its population drop below 700,000 people, and its tax revenues decline by 40% since the year 2000.
This is fundamental. Has anyone liked the Detroit of 5 years ago, of 10 years ago, of 15 years ago? How long has this gone on and people had not stopped to say, stop kicking the can down the road and do something?
So facing an $18 billion hole, the home of American automakers GM, Ford, and Chrysler filed for Chapter 9 federal bankruptcy protection in hopes that it can restructure its debt in order to provide basic obligations to its citizens.
We're going to try to do this in a fair way. In addition, in freeing up the cash flow, it allows us to focus on the key issue that the governor has reiterated again and again, the health, safety, and welfare of 700,000 citizens in the city of Detroit.
In the short term, the filing will force an array of difficult decisions. For citizens, greater challenges to basic services, and for investors and bondholders, questions of repayment.
Well, one of the interesting things about bankruptcy court is that there's always an element of uncertainty. If you have a corporate bankruptcy, there's a pretty clear order of priority. But in this municipal bankruptcy, no one exactly knows who has priority. So it's going to be a real free-for-all.
For the rest of the country, Detroit's filing plays like yet another sad chapter for the former manufacturing giant. And while the attempts at economic reinvention have yet to yield any worthy lessons, the ways in which it maneuvers through this financial crisis may well provide guidance to other struggling U.S. municipalities.
Well, the bigger picture here is a really big picture. The municipal bond market is a $3.7 trillion market in the U.S. And what happens in the courtroom in Detroit in the next months and potentially years, I guess, could set some real nasty precedents. These general obligation bonds, these are backed by the full faith and credit of the tax-raising powers of the local authorities. And if it turns out they're not going to raise those taxes and they're not going to pay these bonds, then that sets a precedent, and that changes our view of what these bonds are worth.
Detroit may well have helped pave the way for 20th century America, but it now may actually be laying the groundwork for how the country will look in a post-industrial 21st century. If there is hope to be had for the Motor City, it may actually lie within the ruins of its former factories. Nothing, perhaps even bankruptcy, lasts forever. Christopher Booker, Financial Times, New York.